Morning and welcome to my real-time options trading, where I trade a real account with real money right in front of you. Now I'm totally transparent as I share my account value live on screen. And I've been trading options online for 28 years now, and I'm here to share how it's possible to trade options with less risk and how you can even follow my trades if you choose to do so. I must say that trading is risky and it is possible to lose money following my trades. My purpose is to help people learn how to trade a proprietary trade I developed called the safe wheel strategy. The wheel strategy, as it's known today, is a popular strategy, but it comes with major risks. And I'm here to help people learn a wheel strategy that does not carry all the normal risks. Now, I've seen people follow the old school wheel strategy that many YouTubers tout, only to end up becoming frustrated and lose money. If you're interested in a conservative, effective approach to trading options for free, you're in the right place. If you're interested in the backtest results of the proprietary safe wheel strategy that I developed, I've made a video on that and I left a link in the description. Okay, let's get started today. What a market, huh? That's down pretty good. Let's see here. Yeah, so what's interesting, I'm dealing with Macy's, and if you look at Macy's, it says that Macy's is actually up today, which is kind of weird. Kind of wish it was going down with the market, that's why this particular strategy could be done with the market, but it is what it is. So let's talk about what happened last week. I sold the $25 strike put, and on Friday I was assigned. So I own 100 shares of Macy's at $25. I also have my put hedge on. So if the market would have, if Macy's would have went down with the market, it would have been no big deal. And you can see that that I'm up on the day about $70. So you can see that the account's up $185 on $5,000. So what am I going to do next? So now that I own the shares, my goal is to sell calls. So let's take a look at the calls. We're going to the trade tab here. Now I'm going to go into the calls that expire this week. They'll expire on Friday. And as I look at the calls, I want to get minimum, since I'm dealing with about a $25 stock, I want to get minimum like 25 cents. And I don't want to, I could go right at the $25 strike just to make sure, because I don't want to sell the $24.50 or the 24 or the $23.50. I don't want to do that, because then when I get called away, if I get called away, I'll lose. So I want to make sure that I'll make money when I get called away. So I want to have premium available in an area where I can make money when I get called away. So I'm going to go ahead and sell the $26. I could have went with the $26.50, but I like that premium right there for the $26 call. So I'm going to sell this one here, just one of those, right? Because I own 100 shares. And the mid price is about 40 cents. So I want to get as much as I can. I'll go to 41 and kind of work this order. So, see if I can get 39 cents for it. Or $39. Okay, so I got $39. So now I have sold a call. Now, one more thing is I need to protect these put hedges. So I'm going to buy a call in the same expiration cycle for around 5 cents, maybe 6 cents right here. I'll just buy one of those, 6 cents, $6. Okay. So now my put hedge is protected in case, Macy's just jumps really high, really fast, because my put hedge will deteriorate too quickly if that happens, unless I kind of have a little bit of a hedge in there. But you can see what I'm doing is I'm selling the shorter term options to pay for the put hedge So the put hedges sometimes they do become a factor, but for the most part, I'm able to sell enough premium to cover the cost of the depreciation of that. Plus, the wheel strategy typically makes money. Typically with the wheel strategy, when you lose money is when the market goes down or when your stock goes down, but not with this particular safe wheel. It doesn't work that way. One thing I want to point out, you can subscribe to my Earnings Edge. Now, I'm totally transparent, and I'm going to show you my account so far with trading the Earnings Edge, which basically is a trade typically made once a week on an earnings trade. And it's that edge that I had found, and I want to mine that edge. But you can see here, so far I've done this on 3 trades. This Macy's one right here, this is was originally put in this account, and then I had to move it out of this account. And when they moved it out, they made a mistake and said that it was down $4.95. But if you look at my other account, it says it's up $4.95. So just take that out of the equation here. So I had BAC where I lost $100. I had JPM where I lost $232. And I'm trying to make 300. And then I had, last week I did McDonald's where I made 154. But you can see the overall counts down around $400. So I started with 5,000. So I'm pretty confident that I'm going to be able to get this up. There's a couple tweaks I made already to the system. But what I'll do is I alert this in my Discord what the trade is. You can follow this trade if you're interested. Okay, so I'll go ahead and take some questions. If anyone has any questions on the chat. Here's one here. Saving Haraldsburg Castle. At what point do you replace the long puts? Well, let's just say that I get called away next week. So I'll make money on the stock, plus I'll get to keep all the premium. And at that point, when I get called away, that's kind of like starting over, and that's when I'll sell those put hedges and I'll just start over. So typically when I get called away, that's when I sell those put hedges. Now there's another time when I sell them, and then when they're useful to me, like I did earlier a couple of weeks ago when the stock went down so far that I had to actually cash in on those and use that hedge. So there's 2 times when I would do that, 2 separate occasions. What do I mean by proprietary? Well, so John says, what do I mean by proprietary? Mainly, I know it's not really proprietary. What I mean by proprietary is you can't really find it anywhere else. That doesn't mean that I can go get a patent on it or anything like that. It just means you're not going to see this anywhere else. To me, that's proprietary. Okay, so those are all the questions that I have now. Unless anyone has any more questions, I'll give you guys just a couple seconds here. Okay, well, there's no questions. I'm going to go ahead and I will be back next Monday, next week at 7:15, and we'll see what happens with the safe wheel strategy.